Hey, this is Kevin. So it's December 12th, and first of all, hope everyone is doing well. I'm going to send a copy of this article from Ron and Sana, as well as producing this video about a market crash that we are right now in the midst of. And this is not to make you panic, it's just to show you how these things happen. And the fact is that we're not heavily invested in commodities, so this may not feel like a bad thing, but it's a good example of what will happen again in the stock market sometime. So it's nice to go to the gas station and pay less for gas, that's for sure. But he talks about what he calls the silent crash. Now, it is something that I've been following, and the word crash emotes a real negative feeling. So, I don't know if it's really a crash, but what's happened is, especially oil, natural gas, and gasoline are making headlines every day. You hear about those, and that's a benefit, unless you're producing oil, unless you're moving oil and gas. So for those companies, there's been some panic selling in those companies, but what we see as well is as the price of oil and natural gas go down, the price is going down even faster and farther, and that's because people are using derivatives. These are traded contracts. They're using derivatives to push the price down. So every day when I come in, a lot of these things are falling by 1, 2, 3%. So this is classic. Maybe they know something that we don't know, but this to me is classic panic selling. This happened, by the way, in I think it was 2009, when oil went way down in price. It was at 120 and it just dropped like a rock. So classic panic in my view, but I could be wrong. Now, basic materials like copper, nickel, iron ore, and other industrial commodities have also gone down. And Ron talks about some of the reasons why these have. Now, these are when you have a great economic growth, these are things that are used to build infrastructure, buildings. I mean, copper is used in everything. So he talks about Japan's recession is deepening, China's demand for basic material, Russia's ruble has collapsed, which is true, and the oil prices in Russia really make a difference. India, Europe, Brazil, emerging markets. Basically, right now the U.S. is doing fine, but everyone else is not doing so well. So, again, the reason why I bring this to your attention is that this is classic, and we will see this again with the U.S. stock market. I promise you that we will see this type of behavior again. And so many people I noticed have fallen in love with U.S. stocks. And when you say, well, the world's not going to do so well, why would you buy world stocks? Well, it's the times when things are doing poorly that you want to acquire them and hold on to them for very long periods of time. When everyone feels like the U.S. stock market is going to go up, that's a time when usually things happen afterwards. And by the way, I'm not predicting any correction or crashes in the stock market. I don't know if and when they will happen. I know they will happen, but this is just a way of, again, doing a fire drill, because my job as a financial planner and advisor is, when people are feeling really good about the equity markets, to remind everyone that things do go down. What goes up must come down. And when things are doing really poorly, to remind people this too will pass. And so with MLPs and other oil-related stock, this too will pass. Oil prices will come back up again. I mean, if the worst thing that happens is if we get some green energy, we don't have to use these dirty products anymore, that would be fantastic. But anyway, hopefully I made you think a little bit today. That was my goal. And everyone, I hope you're well, and Merry Christmas, Happy Holidays. Thanks for watching.